Hey everyone, we got some huge news for PayPal stock investors in the mid-afternoon, January 30th. So in this video, I'm going to go over what that big news is and what it could mean for PayPal stock investors. Now, coming into this news, I had PayPal stock rated as one of my top stocks to buy in 2024. I also own PayPal stock myself, so I'm an interested shareholder to be sure. Let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, as I predicted when the new CEO came in, I saw job cuts coming. If you looked at my video when the new CEO, the first conference call with the new CEO, there was hints that there was job cuts coming, and today we got the news. PayPal to cut its global workforce by 9% as part of the turnaround plan. This comes on top of the 7% reduction last year. So the digital payments company headcount reduction comes on top of a prior round of layoffs last year and will be made through direct cuts and the elimination of open roles, according to a letter sent to employees reviewed by the Wall Street Journal. So two things I like about this plan. Number one, I'm in favor of job cuts here. I thought job cuts are needed for PayPal that's been hurt by its decreasing profit margins as the revenue in the company shifts from the more profitable segment, the branded PayPal segment, to its unbranded segment, and that segment is not as profitable, so margins are compressing. The second reason why I like this layoff is because of the method, the reducing your headcount by removing open roles. I've been arguing for that all of 2023 and starting late 2022. If you remember, the main culprit for this is Alphabet. And I just recorded a video about Alphabet a few hours ago and how much it's cost them to do their layoffs, their severance packages. Alphabet just reported that their layoffs have cost them over $2 billion. Part of the reason for that is the method they went by, firing people, giving them generous severance packages. And I argued if you're going to do it that way, why have job cuts at all? That's not saving you any money if you're paying billions of dollars to cut those roles. And then by the time those savings start to add up, you're needing to hire new people because different areas of your business are growing and you're going to need to fill new roles. And what was the point, right? But if you eliminate your headcount by attrition, meaning you stop hiring new people, you eliminate those open jobs and you just let people, everyday people quit. Every week some people quit, they find different opportunities, they might leave to start their own business, whatever the case might be. People leave your company every week. And so if you want to reduce your headcount, one way you can reduce your headcount is just by eliminating the open roles that you're hiring for and reducing by not replacing those that leave. And so as time goes on, you reduce your headcount and thereby you save on your expense base. And the benefit of that is you keep the people that want to be there, and the people that don't want to be there anymore, they leave. Whereas if you're doing massive job cuts, mass layoffs, you're laying off people that really want to be there. You're laying off people that could be good value additions to your company, right? Unless, of course, if you're laying off people that are underperformers and they're not really carrying their weight, those people should be let go anyway. You don't need to have a whole program to do that. You should be doing that on a weekly basis, monitoring your employees, monitoring your workers, and those that are not worth their weight, you got to let them go. Otherwise, it's hurting the company and it's hurting those that are adding value to your company by weighing them down with people that are not adding value to your company. So that's another case. But if you're planning on letting go a significant amount of people, this is the way to do it, in my opinion. I prefer this method than having these mass firings and offering generous severance packages. So this is good news, in my opinion, for PayPal stock investors. The company needs to cut some costs because growth is coming down. growth is coming down and the segment revenue is shifting. Let me share that with you here. So you could see PayPal management in its latest quarterly 10Q statement saying that the increase in their transaction expense rate for the 3 and 9 months that ended September 30th compared to the same time last year was attributable to an unfavorable product mix with a higher proportion of total payment volume from unbranded card processing, which generally has higher expense rates than other products and services. And so this shift in the business has caused a decrease in profit because of the increase in transaction expense. And that's led to a necessity to trim costs because your profitability is falling and you've got to maintain profitability. You can't continue to experience decreasing profitability. Although if we look at PayPal's operating profit margin over the last several years, it's been volatile for a while, so you don't really see a downward trend here if you just look at its operating profit margin. Between 13.75% and 19%, up and down throughout the last decade, 16.47% as of the most recent update. But if you look at its cash flow from operations to sales over the trailing 12-month period, here, even though there's volatility, you can see a clear downward trend here. Cash flow from operations to sales has been moving downward. If you look at the 10-year chart or the 5-year chart, you can see a downward trend here, 13.11% in this metric. So the new CEO coming in, realizing the business is under pressure and the stock price, to be frank, is under pressure. PayPal has been undervalued according to many investors, especially if you watch a lot of YouTubers. Many YouTubers are saying that PayPal stock is undervalued, including myself. If you look at PayPal's valuation, the forward price to earnings ratio is at 10.38. This is the cheapest you've been able to buy PayPal stock in the last 3 years. You've not been able to buy PayPal stock at a cheaper value. And the reason the stock is undervalued is because of that underlying business trend I showed you earlier. The shift away from the core branded service to the unbranded segment, where the transaction expense is higher, and that's leading to falling profitability for the company overall. So the new CEO has challenges ahead, and I think this is a good first step, reducing headcount by eliminating open roles, and that way not disrupting the business to a large degree, and at the same time reducing the headcount, reducing operational expenses. So I'm a fan of this announcement, although there's more to see. The company reports earnings soon, in about a week, I would say. I'm going to review those earnings results to be sure, and we'll surely get more details about the cost-cutting plans and the plans of the new CEO moving forward. Although it might be a little bit too early. The new CEO just got in a few months ago, so it might be a little early for a grand plan as to the direction the new CEO wants to take the company. But as a starting point, just observing that the cost base is too high, reducing the employee count, and in this way, I'm a fan of the first move from the new CEO. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.